I want to stick with tech. Apple headlines, a huge afternoon of earnings, along with Alphabet and Amazon. Our next guest just downgraded shares of Apple to market perform yesterday, cutting his price target by nearly 20%. His name's Tim Long, the analyst at BMO, joins us on a phone right now. Tim, give me the why.
Hi, thanks for having me. Yeah, we had a little rating change yesterday. There's obviously a lot of concerns out there about the near-term numbers for Apple, and we do think that will lead to some downward number revisions. Our rating change a little more longer-term in nature, concerned about a potential secular shift as we're seeing, maybe a capping out of how high Apple's able to push average selling prices, and we also think they'll be a little bit more concerned about what's next in the portfolio and what could start to drive growth back into the iPhone unit numbers.
Tim, is that ultimately the struggle behind the volume story, that the phone is just too expensive?
Yeah, at this point it looks that way. Of course, they've been successful at moving prices higher by adding new technologies into the devices, basically all of the 10 years that they've been out in the market. But what we've seen from the rest of the industry the last 3 or 4 years is a stabilization. So even though you get new functions and technology in the devices, really have a hard time pushing that on to the user. So at this point, it seems like that's what's happening with the iPhone 10.